Hey, what's going on everyone? Welcome back to another update video of me selling options on the side for some extra income. That's what I do with my Robinhood portfolio. I hold some decent positions, but I also sell options and also open credit spreads, which we'll talk about my changes going forward. And if you like this kind of content, please consider subscribing. That way you don't miss any in the future. And if you want something else to watch after this, go check out my Very Good Food Company video. It's a plant-based food company that's on the brink of bankruptcy, as far as I can tell. But today we're going to talk about me opening put and call credit spreads throughout the month. This is my spreadsheet I use to track how much I've gained or lost from different option positions. And I do this because I like to keep myself accountable. If I lose money, I'm not going to ignore it. I'm going to hopefully learn from it. And out of all of these trades throughout the month, the total monthly return is negative $39.50 so far this month, which is unfortunate because I've spent a lot of time making a lot of these trades, and what I've gained from it, or lost rather, is about $40. And what is to blame for a lot of this loss is very volatile market and me opening put and credit spreads. We'll talk about why that's unfortunate. And if we look at last month, actually, I made $552 either opening put credit spreads or call credit spreads or just selling puts and calls on the side. So drastic change. And why I think this happened is just the S&P 500 or SPY has been pretty volatile in the last month. And I think I'm going to put on the brakes opening positions of put credit spreads and call credit spreads just because of the volatility. Because, by the way, if you didn't know this, put credit spreads and call credit spreads, if we go to just look at a position and just simulate opening one, they're nice because you don't need as much capital up front to open these positions. If I were to sell a put on SPY at a strike price of, let's say, $395, I would need $39,500 of collateral when selling that position. But when you use put or call credit spreads, and we'll use the builder here on Robinhood, and we'll hit put credit spread, what you're basically doing is you're selling a put, and then a strike price right below that, you're buying a put. So the amount of collateral you need is not nearly as much as just selling a put. So for instance, right here, I can open a put credit spread at a strike difference of 393 and 392. So I'd be selling a put here, buying a put here, and making $20 in premium because that's the difference between those two puts. However, the problem is when you sell a put and it goes in the money, there's a chance that you'll be assigned the shares of a company, which is cool because typically you want to sell a put at a strike price that you don't mind owning a company at. And then if you get assigned those shares, oh well, you get something you ended up not having an issue having in the first place. But when this put credit spread goes in the money, it actually just ends up worthless. You don't get anything in return. You actually end up losing the collateral you put down. And so long story short, what ends up happening is you can make a bunch of trades making small amounts of premium, but if you make a couple bad trades that, because of the volatility of SPY, if it becomes closer and closer or even in the money, you can lose a decent amount of money and not get anything in return like shares of a company. So from now on, I think I'm going to go back to the normal, what I used to do of just selling puts and selling calls and not really playing around with this call and put credit spread for now, as long as the market's pretty volatile like it is. And just because I don't have so much money right now freed up in my Robinhood portfolio to do this with, there are two particular companies I'm looking to sell puts on as of right now, and that's Ford and SoFi. Both of them are pretty low cost per share, and so I can open up different positions pretty easily with the limited capital that I have. So that's basically the update. I still have a few credit spreads open, only 3. This one looks like it's probably going to just close worthless. But these two, the SPY shot up pretty high on Friday. So who knows how close, or maybe these will end up in the money and I'll lose even more. But from now on, I think I'm going to cool it, opening these kind of positions and just sell puts and sell calls for some extra income right now, primarily on these two companies that I mentioned. Let me know if you're selling puts or calls, and if so, what companies you're doing those on. I'm always curious to look at new companies, and thanks so much for watching. I hope to see you in a future video.